Did you know that the GDP of the United States grew by just 1.6% in the first quarter of 2024? And I know you're sitting there thinking, what does that actually mean? What is GDP? That's why we're here. We're here to learn about all these economic terms and talk about them in a very simple way that we all can understand. Nobody cares about all the mumbo jumbo, but when we really get down to it, gross domestic product is just the total sum of all the goods and services produced by a certain economy. We're talking about the US right now. This is a very important metric to understand when you want to become an intelligent investor and start making a difference in your life. This can be the difference between thriving and surviving in today's economy. Just looking at it, being like, okay, is the economy strong or weak? GDP is going to give you that number. So when I look at that 3.4% number in the last quarter of last year, I know there was a lot of hopes of interest rate cuts coming and people were getting excited. There was some housing inventory that went out as well, and people were spending a lot more money. But then when we look at this quarter, I think we're starting to see the data and all the numbers where it's, wait a minute, maybe those interest rate cuts aren't coming and spending it's slowed down a little bit as well. And in this video, we're gonna dissect that current GDP growth and talk about some actual opportunities that come about during a time of high interest rates. And more importantly, we're gonna talk about how to leverage all this knowledge for your future financial planning so we can ensure that we're doing my favorite thing, staying ready so we ain't gotta get ready. And it really doesn't matter if you're an investor or somebody who's saving for a new home or looking to cut down on your debt. That economy pulse and GDP is gonna affect each and every one of us. And I just wanna repeat again, just to make sure everybody understands and feels comfortable with what it means, but by definition, it measures the value of all services and products that we generate. It's just like our health. It fluctuates. It's going to impact jobs, investments, and even interest rates. And with that growth of 1.6 this quarter, that's down from 3.4%, it's a kind of sign of the times, right? And how that economic momentum is shifting and the economy may be slowing down. And that brings us back to one of the most common topics that I think we all hear about is the persistent high interest rates. If we just keep it real simple, we'll think of the interest rates as the economy's thermostat, right? The Federal Reserve adjusts this to keep our financial climate in check. But when it runs high as it is now, loans are going to get pricier and savings are going to get a boost. And it's weird because it's a double-edged sword, right? For consumers and investors. With rates staying up to control the inflation, we're in for some pretty interesting financial weather ahead. Goldman Sachs predicts one rate cut in late 2024 once inflation eases. That's a big win, right? For all of us that are really looking at those interest rates and watching our wallets and paying a ton of money for the things that we normally buy. But there is that prediction of one cut this year, and I think we're down from 3 or 4 that they're predicting earlier in the year. And some super simple strategies for this. If you're somebody that has debt, like now's the time definitely to tackle it and pay it down because those interest rates are really gonna bite you in the butt. But if you're somebody who likes to save money, that's good news because what people often forget, they go complaining about interest rates going higher, but the bank also is doing that to encourage you to save more money. So if you do have a nest egg sitting by, you can get higher yields. That's not what I personally do. I really love to use VOO, which is the S&P 500, as my own personal savings account so I can invest in those top 500 companies and not have money sitting on the sidelines getting those marginal yields. We'll talk about that in a later video, but that's another strategy, not financial advice. There's nothing wrong with saving money. It just depends on what your goals are. But one thing I like to talk about is think about industries that actually do well in high interest rates time. And those are gonna be utilities, because hey, you gotta keep your lights on, right? Your consumer goods, and these are like things that you need, not discretionary stuff, but actual like consumer goods like grocery stores and toilet paper. I think we all remember those times, and everything else. But one thing people don't think about, like banks can actually be pretty good when interest rates are on the rise, but you really have to pay attention because it can be very volatile. But I remember here in Australia, one quarter, one bank made $10 billion during the last couple of years just because of the rise in interest rates. So there are opportunities there, but we're gonna dive in on a future video and we're gonna actually look at some balance sheets so we can see if that's an actual smart investment during these times. But those are 3 sectors we can actually look at when interest rates are high. And that's gonna be your banks, your consumer goods, things that you have to buy, and utilities because you got to keep the lights on. One thing I also want to touch on are the things that actually move stocks. Like I talk a lot about economics in the broader picture, but there are 3 things, and write this down, that can actually move equities or stock prices. And that's going to be fundamentals, right? That's going to be like earnings reports and balance sheets and the money they're making, stuff that's in the business. There'll be technicals, so that can be support, resistance, and some other technical indicators that we can dive deeper in some of the more advanced videos. And then it's going to be the news. So what I've seen this previous week, if you were paying attention, is that Google announced that they were going to start offering a dividend, and not too long ago news came out that they're going to start a share buyback scheme. If I'm not mistaken, it was about $70 billion in share buybacks, right? To put that in perspective, the company Target is worth about $70 billion market cap, right? That's how much money that Google is going to use to actually buy their shares back. And this was big news because if you're an investor, that's going to help keep that stock price sitting up there where we want it to be. So that's a huge news thing that can actually move the price of shares. And if you invested in, hey, you'll be laughing all the way to the bank. That's why I encourage everybody to either get invested in these individual stocks, or if you're a newbie, just find a ETF that's heavily weighted in whatever position that you want to get in. And then if you're looking forward to next week, Amazon and Apple are going to be announcing their earnings. So this is a big deal because they have the capability to move the whole tech sector depending on how their earnings go. So when I think about Amazon, I think about cloud computing and AI. And if you didn't know, Amazon Web Services, or AWS for short, is actually the cloud computing platform behind some of your favorite cloud services. And there's a lot of companies that are finally shifting to the cloud. They've been doing it over the last couple of years, but I think now with the compute power that AI needs, you're seeing more companies shift. So analysts are expecting Amazon to be up about 15% year to date just on that individual service component of Amazon Web Services alone. Like, I still remember the day when I thought of Amazon as a bookstore. It's crazy how they've evolved and innovated, and that's why I feel like they're such a great company to invest in. And then of course you're gonna have Apple reporting as well. This is gonna be interesting because I've seen slowing mobile phone sales in China. The Vision Pro didn't do great, and there's not really a huge news catalyst that Apple has going. It's interesting, I've seen news that's saying they're in talks with OpenAI and some other companies to use their generative AI. But if you didn't know, I used to work for Apple, and one thing that Apple prides themselves on is actually the privacy and the protection of people's data. So I know they have rolled out a couple of LLMs, or large language models, that I've tried out, but they just hadn't been up to par. And I said this years ago, and I feel like if Apple gets beat in any sector, it's going to be in AI, just because of the data privacy things that come up. They got to find a way to navigate that. And even a partnership with OpenAI will be interesting. When you look at how much of OpenAI is actually owned by Microsoft, that's going to be a very tenuous and interesting partnership. That's something to pay attention to. I wouldn't be surprised if they miss, but it may not actually move the market, because I don't think a lot of companies are expecting them to really hit those quarterly projections. But I definitely wouldn't count Apple out. Like, they have a buttload of free cash flow and they can make some moves. But this quarter, I would be looking at Amazon's actually beating Apple to underperform. But hey, if they do surprise, that could move the whole market. And it's very simple to look these things up, guys. Like, you can use MarketWatch or just use whatever trading platform you use to actually get this news, because I want you to be more informed. People have been asking, so we're gonna dive into some individual stocks as we go on in the channel. But right now, I just want to educate everybody to get them to understand how to fish, right? We start looking at the macroeconomic news, then we start looking at the fundamentals of the earnings and digging into companies' balance sheets. Then later on, we'll go over the technicals, and we're gonna always be looking at the latest news that are going to cause these stocks to move. Remember, I want to encourage you guys to be the first one in your family to break that generational wealth curse, because when we die, we want to leave more behind for our family than just debt. Until next time, it's your boy Michael T. Ragland, and I am out. Have a good week. Peace.